Okay, good morning everyone. I'm Sai Nair. On behalf of Kirin Advisors, it's a pleasure to welcome you all to Beyond the Numbers Value Discovery Summit 2025 powered by Value Educator and co-powered by Kirin Advisors. Today marks the final day of our 3-day summit featuring a powerful lineup of focused management meetings to conclude the journey on a high note. This is the first interaction of the day 3 and we are pleased to host Rathi Steel and Power Limited. So from the management side, we have ourselves with Mr. Kushal Kumar Agarwal, the Assistant Vice President. We have Mr. Rajesh Jain, President Finance and Corporate Affairs. From Value Educator team, we have Ms. Surangi Mole. So with that now, I would like to hand over the floor to Surangi ma'am. Over to you ma'am.
Thank you for the introduction. So before we start, a quick background on Rathi Steel and Power Limited. So Rathi Steel and Power Limited incorporated in the year 1971 and it operates in the steel and steel products segment. The company manufactures rebars, wire rods and value-added alloy steel products with an installed rolling capacity of around 2 lakh tons per annum and melting capacity of about 85 tons per annum, including group facilities. It markets TMT bars under the Rathi brand through a strong dealer network of nearby 1,000 retail outlets across India, while its stainless steel and alloy steel products are supplied on B2B basis to downstream manufacturers and institutional clients, including government bodies, PSUs, and large infrastructure organizations. With that, I hand over to Mr. Rajesh. Sir, over to you, sir.
Yeah, thank you. Thank you so much. Good morning, everyone. Thank you all for joining us today. We appreciate your continued interest in Rathi Steel and Power Limited and value this opportunity to share our business strengths, progress, and outlook with you. Incorporated in 1971, Rathi Steel and Power Limited carries forward a legacy of trust, quality, and reliability built over more than 5 decades. We are part of the renowned Rathi brand, a name associated with India in steel industry since 1940. Over the years, we have developed into a focused manufacturer of stainless steel and value-added steel products, serving infrastructure, construction, and industrial customers. We operate a modern manufacturing facility spread over approximately 12.5 acres in Ghaziabad, strategically located near NCR region. Our plant has a melting capacity of approximately 85,000 tons per annum and a rolling capacity of 2 lakh tons per annum, offering scale, flexibility and efficiency. We are also India's first mover in using direct billet charging technology for stainless steel wire rods, which delivers energy and yield savings of about 1.25% to 1.5% and gives us a meaningful cost advantage. Cost leadership is a key strength of our business. We benefit from some of the low electricity costs in Uttar Pradesh through open access, supported by continued investments in advanced and efficient technologies. Over the last 3 years, we have invested more than Rs 40 crores in our Ghaziabad facility, strengthening our operational facility capabilities and readiness for growth. In addition, our lean asset base, low manpower and interest costs, and availability of surplus land for future expansion help us maintain one of the most efficient cost structure among peers. Our strategic location near NCR provides us with proximity to key consumption markets and lowest outward freight costs. Combined with a strong distribution network and leadership presence in North India, this gives us a market advantage. Our portfolio includes stainless steel billets, wire rods, and bright bars, along with recent diversification into stainless steel rebars. The receipt of BIS certification for stainless steel rebars further strengthens our participation in the construction and infrastructure segment. We are also seeing encouraging demand of 550 and 550D grade TMT from real estate developers across NCR region, opening up an additional growth avenue for us. Looking ahead, our priorities are well defined. We are focused on improving capacity utilization, scaling high margin stainless steel products, and strengthening our distribution reach. This will allow us to expand our presence in evolving TMT grades and gradually enter allied construction product activities while improving overall margin through a better product mix. Alongside sustainability remains central to our strategy. We are consciously building a more sustainable steel making model through the circular economy route, with a clear emphasis on minimizing fossil fuel consumption. This positions us well in line with the government's green steel vision and provides us with a competitive edge over primary producers in long term. Thank you once again for joining us today and for your continued trust and support. I will now open the floor for questions and look forward for an engaging discussion.
Sir, are we running through the PPT?
Yes.
Okay.
Welcome everybody. Rathi Steel and Power Limited at last, which Jain Saab already explained from where we start and where we are at present. Here we would like to highlight to our key facts and figures. We, Rathi Steel, have a legacy of around 5 decades with direct and indirect manpower of 300 plus. The manufacturing plant spread across 12.5 acres of land, which is located at the NCR region. We have melting capacity of 85,000 per tons per annum and rolling capacity of 2 lakh tons per annum. Our presence as on date is about in 7 states where we are selling our products of MS as well as SS. We have a strong dealership network. Company is a ISO 9001 and 14001 company. We have IS certification for the various grades of the products for our billets, stainless steel and mild billets. In the financial year 25, our total revenue is more than 500 crores with EBITDA of about 24 crores and net profit of about 14 crores. Our journey from decades start from the 1970s when the company is established, and thereafter we have regularly rise up. Initially we have installed a rolling mill. Thereafter went to public issue. We are the first to adopt the toe technology for the superior product. In 2000, company adopted that Thermex technology. It is a TMT and new brand, and the Rathis were the first to adopt the Thermex brand. Thereafter, we also diversified into the stainless steel product in the Ghaziabad. In 2006, we raised the funds through the FPO to support the expansion of Ghaziabad as well as our backward integrated plant at Odisha. So these are the stories. On date, we have manufacturing facilities to manufacture stainless steel wire rod from 5.5 mm to 16 mm and MS rebar from 8 mm dia to 32 mm. We have also developed the grade of stainless steel reinforcement bar. Company has also got approval for FE 550 and 550D grade for the TMT bar, which is the present requirement of the real estate builders.
Next slide.
Our leadership team our managing director, Mr. Mahesh Parekh, he has experience of more than 40 years and is associated with the group for long. Mr. Rajesh Khurana, director in business development. He has also long experience of about 40 years, and he has a great experience in the market. Mr. Udit Rathi is promoter and chief facility officer of the company, who has experience of 15 years in various fields, right from product planning to execution to operation in every field. Also, we had a team of CFO, Mr. Pawan Kumar, Mr. Rajiv Bhattaria, President, Rolling Mill, Mr. Naveen Gayam, President, Steel Melting Shop, Mr. Shyam Bageshra, VP, Accounts and Finance, Mr. Rambabu Dwivedi, GM Administration. Our core products include the stainless steel billets, which are used to manufacture the stainless steel wire rods and other stainless steel products, which we manufacture in-house. Mild steel TMT bars, which is the for which the Rathi is known in the entire India. Stainless steel wire rod, SS wire rod is the product which we are offering for B2B applications. SS flat, it is also a product which is used for B2B applications. It has various railways, auto component tools, appliances, and other applications. Our state-of-art manufacturing facilities at Ghaziabad includes steel melting shop and rolling mill, as we explained earlier. The capacity of the steel melting shop is 85,000, about 85,000 tons per annum, and for which we are utilizing about 60% capacity. The rolling mill capacity of 2 lakh ton per annum, which we are currently operating at about 50%. Recently, company has installed the facility of direct charging of billet. As explained earlier, the hot billet manufactured in the steel melting shop is directly transferred to the rolling mill, wherein the hot billet is directly rolled and converted into the rolled product. This not only reduces the cost of reheating, but also helps the company to reduce the carbon footprint. Company has taken various steps towards energy conservation and the efficiency measures, which include direct rolling, as we explained. We have deployed conveyor system and transfer trolleys for the better handling of the billet and to reduce the manpower and energy consumption. We are also planning for the integrated renewable power system. We have installed VFDs, conveyor system, capacitor banks, etc., to reduce the energy cost and to reduce the carbon footprint. We are also upgrading our mill with the modern equipment to ensure lesser energy consumption. Here is our presence in the 7 states of the company, where in the Rathi has a good presence. We have a broad dealer network across these 7 states. Rathi we have retail LED TMT market. These are our few flagship projects of Rathi products: the Lotus Temple, the Atomic Power Station at Narora, LIC Building, Connaught Place, New Delhi, Tehri Ram, Garhwal, Chhattarpur Mandir Complex at Delhi, and various supplies to Delhi Metro Rail Corporation. These are the few of our flagship projects. Apart from this, there are various other projects as well. Our few marquee clients, because there is no enough space to mention each and every client, so there are few of our clients who are taking products from us. For the stainless steel products, our clients are like KEI Wires and Cables, Vivid, Bansal Group, Supron, Modi High Tech, and the client for TMT rebars are various real estate groups including DLF, GMR, Ambience, Omax, BL Kashyap, Ahluwalia, ATS, Gammon, VVIP, and the list is very long, including Wave Group, Nirala World, and Ace.
Okay. Now, when we talk of adversity in Odisha operation, it's a history now. Yes, we started our plant at Odisha in 2008, but thereafter, due to certain challenges encountered on account of government inability to allocate iron ore mines and etc., we had to close down that plant, and it has already been sold off. post debt restructuring. So now we are at the turnaround stage, which we are showing in our results. Now its core strength. First mover.
Our core strength is our technology and cost leadership, wherein we have invested about 40 crores in the last 3 financial years just to enhance the capacity and capital utilization. We have robust manufacturing background. As we explained our manufacturing capabilities, we have unique hot charging capabilities, enabling higher efficiency and lower fuel use of. The financial strength of company is very good with minimum debt level. We are one of the least leveraged company in the similar space. We have lean cost structure with lowest manpower and direct cost due to the lower flow. We have strategic market advantage due to our location where our plant is at NCR, where is a great demand of these our products, and due to the location, we are able to reach the market in the lowest minimum freight cost. Our strategic path ahead includes we are enhancing capacity and asset utilization. Our main aim is to set out our existing assets and to install the further facilities after shutting down our existing capacity. Our initial target was to utilize the 55 to 50% of SMS and to 80% going forward, for which we are working. We have also installed a conveyor system for one of the rolling mill, and for another rolling mill, the conveyor system is in process. We are also planning to implement rooftop solar power generation system to reduce energy cost and carbon footprint and to depend on our own energy system. We are exploring these things and in advanced stage of planning. We are also planning to expand our stainless steel portfolio to manufacture some high-end products. Once our process of conveying system to the TMT mill, we are also planning to expand our green steel rebar portfolio, which includes 550D and other grades of TMT bars with the green steel. The green steel is basically a recycling based circular economy, wherein the carbon emission is very less. It is due to the process adopted and the material used.
Mr. Doctor.
If we compare the conventional steel versus the green steel, there is very advantage. In conventional primary producer, they are producing the steel through the iron ore and coke, whereas in the green steel or what Rathi Steel and Power we are following is the manufacturing through circular economy, where we are recycling not only the product but also help in saving the Mother Earth. The use of the technology consume lesser energy than the traditional plant, and the carbon emission, which in the case of primary producer is about 1.7 tons to 2.2 tons, is as low as less than 1 tons in the green steel. It not only saves the high fuel cost, but also helps to reduce the carbon footprint. It's about the steel industry of the country and the government efforts, which they are trying to reduce the dependency on the traditional steel with high carbon emission to the best possible green steel. Now we would like to seek your attention on the financial highlights of the company at page 24. Our year-on-year revenue growth is 1.84% in the Q2, The fixed asset turnover is 5.6 times, with interest coverage is 4.42. The return on equity is more than 10%, and year-on-year profit growth is as much as 149%. The return on capital employed is more than 10%, and the long-term debt to equity ratio is as low as 0.03 times, with book value of 14.82. Here's the key financial highlights, wherein the total revenue and EBITDA of the company is represented. Now we would like to thank you once again for you, and would like to open the floor for question and looking forward for the engaging discussion. Thank you.
Thank you for the detailed presentation, sir. So participants, the floor is now open for Q&A session. If you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in chat box. Mr. Murli, you can go ahead and ask your questions.
Yeah, good morning, Kushalji and Rajeshji.
Good morning.
It's really a wonderful presentation, very elaborative, and the storyline is excellent. And when I look at actually the company's profile, it's amazing.
Thank you so much.
A lot of history, 55 years, and then when I look at the team, also the senior management team, it's a great team, right? So the storyline is good, profile is good, and when I see even some uniqueness, means the USP I see about plenty of, but even on your website you mentioned about 11 areas we are the first ones to start new technology, new things in India. So having so much background, great history, but it's not matching with the numbers we see at the financials. So I don't want to get in very detail and go number by number, but in short, just I want to understand looking at that such a great history and great strengths, I would have seen the financials, especially the top line is around 25,000 crores. It's not just 500 crores. So just wondering, what is the missing link? What were the challenges so far so that we could not grow, and how are we going to overcome them in the future? That's the only question I have. Thank you.
Thank you so much. As far as growth part is concerned, if you have seen that there was a history. We were having Odisha plant, and we faced a lot of problem with Odisha plant with respect to government ban on iron ore and all. So that plant really resulted us in, I would say, it gave us a slip in our growth in the sense that Odisha plant we operated only for 4 years. Thereafter it got closed because of government initiatives and all. Now we are in a consolidation phase. Now we are focusing only on Ghaziabad unit, which we have. And as far as growth is concerned, talking of 25,000 turnover, maybe in future we might be able to achieve, but as of right now, whatever capacities we have, we are utilizing those capacities, and with these capacities at the present price, this is what we could achieve. But maybe in down the line, we might be able to achieve better results.
Means the question was, sir, is even if you look at past 11 years financials, it's more or less we are in the same 400, 500 range only. So are we restricted ourselves to, or are we comfortable with this revenue, or we never thought of any scaling?
No, we'll definitely thought of scaling, but there was a bad phase during 10, 11 and up to 17, 18, we were in a bad phase in terms of debt restructuring, Odisha unit getting sold, because that was the period when steel per se, the entire industry was in bad shape. You must have seen that Bhushan, that unit got sold off, because of problem in the steel. So it's because of that only that maybe in 2008 if you have seen our balance sheet, the turnover might be 800 crores, but that was including Odisha unit. Now what we are focusing on Ghaziabad, and we are trying to scale up our operations as much as possible. That's the reason we are exploring various options, like we have started direct charging of hot billets, by which we can increase, and then we have restarted our rolling mill also. If you see 2018-19 results, that time we were doing only job work because of the financial crunch. So that time the turnover was much less.
Okay.
But now,
Thank you. Yes, sir.
And in terms of volume, there is always an increase in the volume. But prices are in not our control.
Yeah.
At one point of time, we sold TFT bar at 90,000 rupees tons.
Agree.
So that is the reason. Otherwise, we are focusing only on steel. So there is no allied business as such.
Great. Thank you, sir. I wish lot of success for the Rathi Steel and Power, and I hope to see some good growth.
Yes, with support of all the stakeholders, we'll definitely grow.
Thank you. That's all.
Once again, participants, if you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box. So we have some questions here in the chat box. We'll address that first. So the first question in the chat box is from Mr. Pranay Jha. He's asking, currently TMT is operating like a converter and hence lower margin. What EBITDA margin delta should we expect once SMS integration and direct charging for TMT are fully implemented?
My direct charging of hot billets for TMT operations will be operational somewhere in Q4. So that time, subject to market conditions, we expect an increase of approximately 1 to 2% EBITDA from the present level.
Okay, thank you for answering that, sir. So the next question. So someone's asking, in stainless direct charging improved fuel cost and scale loss, but increased power consumption. Net, what was the EBITDA impact per ton, and should we expect a similar benefit in TMT?
The direct charging improved fuel cost and scale loss, but increased power consumption. No, it's not like this. The cost of power consumption is very low as compared to the cost incurred for reheating the billets. And yes, definitely the net saving is, we also explained, is about 1.25 to 1.5%. And in TMT, since in TMT, as sir also explained, the impact would be about 1 to 2%. So we are expecting somewhere around 1 to 1.5%.
Okay, thank you for answering that, sir. Okay, the next question. So someone's asking, you mentioned some additional capex to replicate direct charging for TMT. Can you quantify the capex and timeline, and will this be funded through internal annual accruals or debt?
Timelines, as I already told you, I think it will be operation in Q4 of current financial year. As far as funding is concerned, we'll definitely do it with a judicious mix of debt and internal accruals. And quantify capex will be somewhere around approximately 4 to 5 crores at least.
Okay, thank you for answering that, sir. The next question is from Mr. Pranay Jha. He's asking, inventory levels rose sharply post TMT restart. At what utilization level do you expect inventory days to normalize, and what would be a steady state inventory range?
See, in TMT, post the production of TMT, where anyone has to make a stock of the TMT business is for size basis. We are producing 8 mm, 10 mm, 12, 16, 20, 25. So we have to make stock of all grades or all sizes of material. Apart from this, we are manufacturing 3 grades of material, including 500 and 550D. So since we have to have a stock of the all grade material of all size so that I can fulfill the demand of my customer, I have to have the stock, high stock.
Okay, thank you for answering that, sir. The next question. Sir, someone's asking, management emphasized finished goods pricing at main margin as the main margin driver. Roughly, what is the EBITDA sensitivity to a 1% change in realizations, assuming costs remain constant?
Whenever there is in steel, what happens is if there is a decrease in finished goods price, that gets passed over to raw material prices also, because it's a commodity. So it never happens like if finished goods prices are decreased, raw material prices are also decreased, except for the inventory part. So it's not like that. It always happens in steel, and that is the reason we always keep lower inventory to take care of this fluctuation in prices also.
Okay, thank you for answering that, sir. The next question someone's asking is, you highlighted imports indirectly hurting pricing via flat to long spillover. Do you see this as a cycle issue or a structural one, especially with FTA routes like Indonesia and Vietnam?
The product we are manufacturing is these are not, impact on a long run. It is occasional things, and the product which we are manufacturing is not importing so much. Yes, there is a result on a quarter basis, but not so much, and we do not foresee any issues with these imports.
Okay. The next question is from Ms. Maya Nambiar. She's asking, with borrowing costs currently 18% and sanctioned reduction to 16%, what is the sustainable medium-term cost of debt you are targeting, and what needs to happen to get there?
Everybody targets for the minimum debt cost. We are also targeting a cost of in line with the RBI guidelines. So we are trying to get into that by approaching other banks for sanction of credit facilities. So we expect that it will be somewhere around 10 to 11%.
Okay, thank you for answering that, sir. Once again, participants, if you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box. Sir, I think we have covered most of the questions here. So, can we conclude the meeting, sir?
Yeah, if there is no more question, yes, you can conclude the meeting.
Okay. Yeah, so thank you, Kushal sir. Thank you, Rajesh sir. Thank you all the participants who took their valuable time to attend this meeting. Further, if you have any queries, feel free to reach out to us at corporateaccess@kiranadvisors.com. Thank you.
Thank you, Team Kiran, and thank you all the attendees and participants and stakeholders. Thank you.